So I want to do a quick review of source documents. I'm not going to go over everything, but I'm going to go over the main ones. Source documents are basically proof that a transaction has occurred. We need proof in case the government wants to audit us. We want proof to show that we're following the rules. Basically, we need documents for everything that we do. So probably the most common one is the cash register. Recording every single sale we make is kind of tedious. Every transaction or every cash register has a summary at the end of each day, and you can kind of take a look at the example right here. It lists by each type of payment. Amex or American Express, $222.36. Each one is recorded. We can make one transaction for each item on this list. It shows us the cash and the debit, so basically cash or bank account. Gift cards, which is basically accounts payable for us. We've already received the money, we just owe them stuff. Taxes and credit cards, what they paid and how much we're going to receive from each credit card company. So a big one is receipt versus invoice. Now the receipt shows items we've purchased and how much we paid for them. That's the key thing. It's proof that it's been paid for. If you take a look at this example right here, we've got base price $750 and a total of $100 paid. So it shows the credit card that was used. It only shows the last four digits, but the key thing is the receipt shows what was paid. Now, on the other hand, invoice shows what's been ordered, maybe even been sent, but it has not necessarily been paid for. This is why invoice always means accounts receivable or accounts payable. So everything that we've ordered is right here, the taxes, the total, everything set up, but there's no proof that we've paid for it. So what we need is, if we have an invoice, we actually have to show that we've actually paid for it. This can be done through the bank statement. We can use a credit card statement. We can print it out, show proof, or even get a second piece of paper that's a receipt that shows that we've paid cash. So here's an example of a bank statement, and it shows just everything that we've done during the month, each item, and it's proof that we've actually paid for it. We'd have to put the receipt, or we'd have to put and we could put the if we have a bank statement to show proof, we could always attach the invoice to the proof. That way we have a record that it was paid for. And finally, invoice versus bill. It basically means the same thing. There's no proof of payment. Invoice is what we've ordered, and it's usually an irregular credit sale, something that's on accounts payable or accounts receivable, whereas a bill is a regular payment according to an agreement. You sign up for a phone, you pay a regular phone bill. This is why it's called a bill. They mean the same thing. Invoice is the same as a bill. Both use accounts receivable or accounts payable. Hope that helps.